Welcome back to Dynamo DeFi. Today, let's talk about FTX. FTX was one of the largest cryptocurrency exchanges in the world, and its complete collapse this week sent shockwaves across the world of finance. In today's video, I'm going to try to dive in sequentially to exactly what happened and what may happen in the future. Let's get into it. To start, let's lay out the main characters in this story: Sam Bankman-Fried, the FTX exchange, and Alameda Research. Sam Bankman-Fried is an American entrepreneur who was worth $17 billion as of earlier this week. He first founded Alameda Research in 2017 to take advantage of arbitrage opportunities, where Bitcoin was trading at a 10% premium in Japan to the rest of the world. Since then, Alameda Research has turned into a quantitative crypto trading fund and is one of the most well-known names in the space. Now, I can no longer show you their website because it was taken down this morning. Bankman-Fried is also the founder of the FTX exchange, which is one of the largest crypto exchanges and which processed over $5 billion in transactions every day as of earlier this week. And this is where things get a little dicey because the relationship between Alameda and FTX has always been questioned since they are technically two different companies. But despite these questions about the relationship between FTX and Alameda, things seem to be going pretty well for FTX. Earlier this year, they acquired the Voyager app, and Bankman-Fried had been on a bit of a PR spree. He was lobbying in front of Congress and was seen by many as the face of the American cryptocurrency industry in Washington, D.C. Furthermore, FTX actually sponsored to name the Miami Heat arena FTX Arena. So regardless of what you thought of Bankman-Fried, he was seen as one of the most well-known, most credible names in the crypto space. And then things started to change 1 week ago on November 2nd when CoinDesk published this expose. This expose was an apparent leak of Alameda's balance sheet, which had $14.6 billion in assets on it. Sounds good, right? Except for one problem. Of that $14.6 billion, $3.7 billion was unlocked FTT and $2.16 billion was FTT collateral. That means that more than a third of Alameda's assets were FTX's exchange token. This token is used for utility on the exchange to get discounts on fees and those sorts of things. And, some of you may be wondering, especially if you come from traditional finance, how is it that this exchange token was valued at so many billions of dollars that this one fund could hold over $5 billion? And as it turns out, if you look at the market cap, when this expose was released, the circulating market cap of FTT was actually only $3.3 billion with $120 million of volume daily. Now, what is the problem with that? Well, the problem is that they had $5 billion of FTT, most of which was locked, which they would have no way of selling if they had to. Furthermore, of their other assets, those included other tokens like Solana, which was a top 10 coin at the time, but many smaller tokens like MAPS, Oxy, and FIDA. And if you look at those tokens, many of those had less than 1% of their supply in circulation, meaning that the total market cap in circulation was only a few $1 million. And then Alameda was holding millions and millions of dollars of locked tokens that there was absolutely zero liquidity for in the market. After questions about this swirling around for a few days, Caroline Ellison, the CEO of Alameda Research, tweeted out confirmation that this balance sheet was accurate, but adding that they had more assets that were not reflected there. And this is where things really started to go south, because an hour after that, CZ, the founder of Binance, the largest cryptocurrency exchange in the world by far, and an early investor in FTX, announced that Binance would be liquidating its $2 billion investment in FTX, which was in the form of FTT tokens. And he said they would do it in a way that minimized market impact. But regardless, the price of FTX started to drop in anticipation that he would sell his tokens. And so then Caroline responded, if you're looking to minimize the market impact, Alameda will happily buy it from you today at $22. So what happened to the price? It promptly dropped down to $22. And you may be thinking, shouldn't this reassure the market that there's this major buyer for FTT at $22? But people started to speculate. Why exactly was it that it was so important to Alameda that the price wouldn't fall below $22? Why not offer to buy it at $20, $18, $10 and get a discount? And many people started to speculate that perhaps they had used their FTT as collateral on loans and they would be liquidated if the price dropped too low. And so simultaneous to all this happening, people were starting to get spooked because of the close connections between FTX and between Alameda Research. So for example, on November 8th, this whale withdrew over $200 million from FTX in 2 separate transactions. And on November 8th, Bitcoin Magazine reported that Sam Bankman-Fried had told staff that over $6 billion in total was withdrawn from FTX over the previous 3 days. And so as news of this came out, the FTX price broke through $22 and completely plummeted to the lowest level it's been in several years. And then news came out that shocked the world of crypto. CZ, the founder of Binance, announced that he had submitted a letter of intent to acquire FTX because they were facing a liquidity crunch. And the market actually rallied after this happened. People thought maybe Binance is going to step in and save the day. They're going to acquire FTX, they'll absorb their customers, they will be the undisputed market leader, but everyone will be made whole. Unfortunately, that is not where the story ends. Today, November 9th, news came out that the United States was probing FTX over mishandling client funds and lending those funds out. Furthermore, Binance announced that although they had submitted a letter of intent after examining the situation at FTX, they said that the issues were beyond their control or ability to help, and they were walking away from the deal. This leaves us with the question, what exactly was going on at FTX that forced them to go to Binance for a bailout, and that furthermore made Binance walk away from acquiring their largest competitor? Well, Lucas Nuzzi, the head of R&D at Coinmetrics, did some analysis on-chain and found evidence that Alameda may have actually used FTT as collateral to take a large loan from FTX earlier this year to keep themselves from going under. As I mentioned, the relations between these companies have always been in question as far as how closely integrated they are. And so here we are on November 9th, wondering, was FTX lending out customer funds to shore up Alameda? And just how many did they lend out? Furthermore, we don't know how big exactly is the hole in these 2 companies' balance sheets. The price of any token that Alameda holds has absolutely plummeted, and in fact, the price of Bitcoin has dropped below $16,000 for the first time since the fall of 2020. So this has taken down the entire crypto market with it. Now, if you want to see which coins Alameda has exposure to, in case you have some exposure to that and want to manage your risk, then Tom Dunleavy, a senior analyst at Messari Crypto, compiled this list of FTX Ventures and Alameda Venture deals. I'll provide a link to this in the description of this video. And now here we are waiting to find out just how big the hole is in FTX's balance sheet and whether they'll be able to make a deal to make some or all of their users whole. If you personally have funds stuck in FTX and want to share your story, drop a comment down below because I want to highlight some of those in an upcoming video. If you want more news stories on FTX as the situation unfolds, be sure to subscribe to this channel.